Good morning. Good morning. Hello, good morning. How is everyone? We are right on time in the London session. Right on time. We are right on time. Hello, good morning. How is everyone? We are right on time in the London session. Right on time. Right on time. We are right on time. We are streaming both on Facebook. We are streaming both on Facebook and YouTube. Today we are not lagging even a bit. Today we are not lagging even a bit. So good morning from wherever you are listening me from. This is the Trading Cyborg and this is the London session. London session. So we are live both in the both on Facebook and both on YouTube. So let me forward this to people who would want to join us. So another live session trading GBPUSD. As we said, this year things are getting hotter. Things are getting hotter. So morning to everyone. Things are getting hotter. So today being on a Tuesday is a great day to begin the day. So just a minute, let us wait for the others to join us. Remember, we shall be here every day, all day, from Monday, Friday, Saturday, Sunday. We shall be here. We shall be here. All right, so we can begin. We can begin. So today is on a Tuesday. I hope you are okay. I hope you are doing well. My morning is very okay. I'm in the best of the moods to attack the market, and I hope you are too. This week, just checking at the Forex Factory. Just checking at Forex Factory, because that is usually our first stop whenever we are trading every day. This is not something you do once a week. It's a daily thing. It's a daily thing every day. You have to check Forex Factory. Forex Factory. You have to check Forex Factory. Now let us check Forex Factory from date what? From date 19 to from date 19 to date 20. Okay, this week. All right, so this week, this is our high impact news for this week. Yesterday there was a bank holiday, so there is no way we would have been in the markets because of the low volatility. So we begin by checking Forex Factory. Why? Because Forex Factory is what will give us news. And why is news important? Because when news occurs, or when there is news, that is when there is something called volatility injection. Volatility injection. So the market is volatile at specific times of the day, specific times of the year, and many people don't know this. In our case, whatever we are seeing right now are the red folder news, and the red folder news, these are the news which bring about volatility in the markets. When we had a bank holiday, there was nothing, and we could not even get into that market yesterday. But from today, we can see that today we don't have any USD news, but we have GBP news. We have GBP news, so we have to be careful. Tomorrow we also have GBP CPI. Then we also have USD news during the New York Stock Open. On Thursday, we have USD news. These are red folder news. Then on Friday, we have so from today, we have a lot of volatility coming in, and we have to be in the markets. We have to. So kudos to everyone who has made it to this live at this specific hour. and I hope you are going to get value from whatever it is I'm dispensing here. I'm dispensing a lot of wisdom, and I hope this wisdom is going to help you in your trading. I'll be here every day during the London session, and it will be very wise for you to join me. I will also want you to fund your trading account. Fund your trading account so that you can trade live, me and you. So the link to funding your account is on my bio. Fund your account, get me here, let us continue live trading, me and you. Okay, so we were checking the Forex Factory. Now the next step is to check our technicals, what we analyzed yesterday and what is happening today. Because as I said in my previous sessions, information is always changing daily, every hour, every minute, every second. We are getting updated information every day, and the best thing is not to rely on your pattern, your favorite pattern, your Bollinger Bands pattern. Your skill in the markets can only be determined by one thing: how well you adapt to the changing market structure, and how low your ego is in adapting to the mistakes or adapting. And how can I explain this now? How do we explain this? So sometimes we go into the markets with our bias. For example, we may have a very strong bias for bearish tendencies based on our technical analysis. But a good trader, an intelligent trader, an informed trader knows that their biases are useless when it comes to price action. So as a good trader, you should be ready to change your mind immediately you are confronted with new information, and don't waste time trying to understand why or what has happened. Just change immediately. Okay, so this is a good example for our case. So if I am audible, you can send some likes, you can send some love, so that you can know we are together, me and you. Are we together, me and you? So if we are together, send some likes. So today is a good morning because we have news at 10 a.m. Alright, so let us begin our analysis, our technical analysis, before we proceed to fundamental analysis. Remember, this is just the market open. So we have market open. I said we have market open. Always you have to check time. So right now, remember, you just don't go into the markets expecting a win. So we have market open. We have what do we have? We have the kill zone hours. What else do we have? We have what do we have? What do we have? Then we have market close. So we have those three segments in every day of our trading market. Right now we are in the market open. Some few minutes from now, we shall be in the kill zone hours, and then later we shall enter the market close, which is usually an overlap
between the market close and the New York Open. Alright? So these are the simple fundamental small information you should have about the markets. So right now we are buying time. We are buying time as we do our analysis. Okay, so we are on time. We are on time. We are not late. We are on. Very nice. I like those lights. We are on time. So we are on time. All right. And if you have any question, I suggest you ask any question before we dive in for our today's analysis. Thank you very much for those likes. So before we dive into in our today's analysis, prepare your question, then you shall ask it in due time. Alright, so we can begin immediately. All these are lines. So what we shall do, we shall start afresh. So I'll remove all these drawings, then we can start afresh. And we shall start from the weekly time frame. That is where we start, and we shall be doing this every day. It is better for us to continue the same thing every day, to do the same thing every day, and create a routine rather than trying to invent new things. Because there's nothing we are inventing in these markets. We met the markets here. Jesse Livermore met the markets here and is going to leave the markets here. We are going to pass these skills to our children, and then we shall leave them here. Our children will die, we will miss the market. So we are not inventing anything new in the market. Whatever it is we are learning has been there for close to 150 plus years. 200 years, 300 years. It is only that the language changes over time. The language, the market, the price action language changes over time. Alright? So, let us begin. We begin by the analysis of the weekly time frame. That is something you have to do every day. Remember, this is your money you are risking. And when you are risking your money has to be risked in a manner that even you will be proud once we close the market. Because most traders regret immediately after the market closes. What have I just done? So whatever actions we do in this market have to be aligned with how we would want to feel after the market closes. So this is our weekly time frame. On our weekly time frame, we check for significant order blocks, and we can see from our price action here that price has been reacting off this order block from around 5th January. Yes, it began around 29th, 22nd, but really it came and filled this level around 5th January, and from that point it has been trying to get down, even if that process has not been easy. It has not been very easy for GBPUSD to go down. So with that, we can frame a bias, a sell bias. Why? Because price is reacting off this level. If by any chance price comes and closes above this level like this weekly level, now this is a very strong bullish indicator, a very strong bullish, because first it will have closed above a weekly time frame. I don't know whether you guys are seeing that. So if, for example, hypothetical case scenario, everybody say hypothetical case scenario. So if hypothetically price came and closed above this level, we would have new liquidity points. So our new liquidity point will be that level, and then our other new liquidity point will be at that level. But only if price can close above this level using a very strong wick, not a wick, a very strong body, or what we call a marubozu candle. So marubozu candle is like a bulldozer. It just cuts deep. Okay, so unless we see a strong candle which closes above, it's going to be hard for us to have a bullish bias. Right? So today I'm clear, I'm not buffering, no one should complain. If you're complaining, it is your problem, not my problem. On my end, we are very clear. Right? So once now, because we don't have that bullish bias, based on the fact that our weekly time frame is reacting off this level. So the next thing we do is drop to the daily time frame. So this is a multi analysis. In our multi analysis, now this is our weekly order block, where price is reacting from. Now in our daily time frame, we check for order blocks which have been broken. For example, this order block here. If I can enlarge my screen for you to see. Alright, if I can enlarge my screen. Now this was a bullish order block, signifying that price is creating lower lows for it to do what? To go higher. Now these are called lower highs. So price was creating lower highs for it to shoot higher. But what did it do? It came and met this serious bullish weekly order block. And when price reacted from this weekly bullish order block, what happened? It closed below. So what you can see here, we are using price action, reading and interpreting market structure, not using indicators. Okay? So when price closed with the body, that was what we needed for a change in momentum. So the momentum changed from bullish to bearish by the fact that this body of candle or price action closed below, and then price action came and retested this level. Imagine. Oh my goodness. So bus, let us mark like that. So price came and reacted off this fair value gap. That is the weekly time frame. Now when price reacted off that fair value gap, what happened? We reversed again. Now price has come down again. It has met these other bullish order blocks. And what has price done? Price has closed below. We have said it must close below. Close below. Even though this candle was an opening price candle, but it closed below. And by it closing below, we get more confirmation that indeed we are going down. So with that, we drop to our 1 hour time frame. So 1 hour, 4 hours, 4 hours and daily are almost the same. Okay, so we can extend this. So we have a order block here. We also have a fair value gap here. Now on the 1 hour time frame, what I check for or what I look for is something called a high of the week or a low of the week. A high of the week or a low of the week.
Just cut deep. Okay, so unless you see a strong candle,
so in the 1 hour time frame, I'm checking for a high of the week or a low of the week. What is price doing? Is price reacting off the high of the week or the low of the week? So in the higher time frame, I'm checking for whether price, that is in the 1 hour time frame, I'm checking whether price has created something we call the high of the week. The high of the week. And when price has created the high of the week or a low of the week, I know we are going to sell. So it is simple what I'm trying to tell you. Whatever it is I'm trying to tell you is quite simple and straightforward. So when I want to buy, I have to look for a sell first. And when I want to sell, I have to look for a buy first. So this sell is what we call the low of the week, and this buy is what we call the high of the week. So in our case, we already have a buy. So this buy is what I'm calling an inducement trap, or what we call a Judas swing. So a Judas swing. So we have Judas swings in the weekly on a weekly perspective and on a daily perspective. We have all those things. Okay? So am I audible? Are you hearing me? So today no one can complain that, oh, the live lesson. No, today we are a bit clear. So with that, now the only thing which I'm which remains is getting an entry. So I take last week's high and this week's high and draw a what? A rectangle like that. So this is our best sell level. Why? We have used a fib. We have used the fib. So sell level. So this is our best sell level. Alright, so when we drop to our daily to our 15 minutes time frame, this is an already confirmed trade based on our higher time frame analysis. So I will be taking this trade. Okay, just a minute, I get in. So now I'm in that trade. So my risk is 20 pips and my reward is I'm looking for around 50 pips if it is going to be possible. So 20 for 50. So 20 pips for 50 pips based on our higher time frame analysis. Remember we said when we get a good trade which aligns with our system, we don't hesitate. We don't fear. Okay? So we wait and see how this trade is going to play out, because it has come to our best sell level. I can also see in the 15 minutes time frame, I can see that price wants to close below this level, but I'm already in. So even if it does not close below this level and it comes and takes me out, I am already in that trade. I am in. Why? Because it has exhibited signs. So we have our accumulation here in the morning up to around 350. Then here we have our Judas swing, a fake move to induce the sellers. Then I'm anticipating this is going to be now the real move, unless something of course happens. So this is a good trade, it's a safe trade, so we just have to wait and see what the market has in store for the trader. This is what I was telling you. Price has closed below this significant order block. I don't know whether you can see it, but price has closed below. It has closed with a body, even if it's just a small part of it. You see, for us to say it has not closed below, this body, we must, the wick has to begin from this level. Okay.
What the market has in store for the trader. This is what I was telling.
So we have news. So we have news. Coming up at around 10 a.m. or in the next 30 minutes. So we shall wait for the news, and then we can know so what happens when price closes above this level. If price closes above this level, then this level, our whole trade idea becomes, what do I say, becomes invalidated. It's invalidated. So sometimes I'll use a 20 pip stop loss, sometimes I'll use a 30 pip stop loss, sometimes I'll use a 5 pip stop loss. It all depends on the market bars. Very nice. So this is a bit clear now. So I was saying, once price has closed below this support level, to me that's an indicator. It's an indicator of a sell. And again, remember, we had already confirmed for a sell. So ideally I should have gotten at this level. If I was to get, I should have gotten at around 8 a.m. But remember, 8 a.m. is not a good London time to get in a trade. So I have done myself justice by waiting. So our sell level or our sell signal comes from this, from the anticipation that price is going to as reverse to a premium area. So we are able to sell at the best sell prices we can get. Okay. So we shall wait for the trade to play out as we analyze other pairs immediately. Okay, so our work is to wait for the market to give us what the market wants to give us. When we go to, let's go to which other pair? GBPUSD, no, gold. Eh, I should be trading gold, by the way. I should be trading gold. So last week, someone told me to analyze gold, and gold did exactly what we said. I just never follow gold. So we said that gold, you can even see this this upward direction I had marked on gold. So we said gold will come to these mitigation blocks. So mitigation blocks are just other blocks which have been broken. So gold will come to this level and retest it again, because that is what gold does a lot of times. And surprise, surprise, gold did exactly that. Gold did exactly that. So how many pips are these? 126 as opposed to gold went gold went around more than 1,643 pips. Am I calculating this wrong? These are a lot of pips. A lot of pips. So using my calculator, let me see how many pips are this. And the other problem with gold is that gold is mostly volatile during the Asian session. Most of the times. In fact, last year you will see that data released on gold shows that it was very volatile during the Asian session, which is a session I rarely trade, or I never trade it at all. So what are we expecting gold to do now? Since we are on constant buys, we can only expect gold to do exactly as it did in our last prediction for gold. All right. So what do we expect gold to do today? The only thing we can expect gold to do is drop. And remember, what I'm giving you is an A setup, not just a setup. That's an A setup. So if you are patient enough, gold will eventually get to this level. And when it gets to this level, your work will just be to buy. Why? Because this is a mitigation block, and price will always go to test mitigation blocks. So we have been streaming for 45 minutes. We are already in a trade, a very serious trade, by the way. So let us check our GBPUSD trade. Let's check our GBPUSD trade. How is our GBPUSD trade faring? So it is at break even, but I would wish for it to get to this level. There is also an area of liquidity. So if it can come into this level, it will have done us a lot of because we shall just end the stream immediately our target is reached. We are in slight profits. So I give my stop losses are always above. Okay, they are always above a significant structure to give room for my trade to play around. All right, price is already reacting to a level. So it may take around how many hours? Maybe 2 hours, 3 hours. So the news is what is going to give us a direction going forward. The news, today's news, which is coming out in the next 12 minutes. So we are already in the markets. We don't care about the news because we know that the news is meant to align with our strategy. So price might come and fill this a small fair value gap here before it proceeds down. But regardless, our stop loss is here, so we are prepared for anything that might happen. Do you got any question? As we wait for this market to unfold. Remember, this stop loss is already budgeted for. What do I mean by budgeted for? It is something I've already accounted for in my psychologically. It's something I'm prepared for mentally. It is something I'm prepared for financially. And that is what all your trades should look like. all your trades should not be able to shake you. No trade should shake you to your core, that now you cannot eat or sleep because of a particular trade. Yet if you had just accepted the outcome, you would have faced it more courageously. So accept the outcome first. When you accept the outcome, the market will give you what you want. Even if you are trading $100, if you are okay losing $10 per trade, then get in. If you are okay losing $50 per trade and you only have $100, get in and lose everything. At the end of the day, it is us traders who create problems for ourselves. You know you don't have much capital, yet you want to risk everything. Why? 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 Ask yourself why. So let's go back to gold. So if gold wants, gold can come back to this level for a cleaner buy, a better and a cleaner buy. We can check indices if there is anyone who trades indices. So on indices, we check the weekly time frame. Remember, the better your skills at analyzing, the more confidence you have. So confidence is directly correlated with the knowledge you have as a trader. So knowledge plus experience solves a lot of your problems in the market. You may not have a lot of knowledge, but your experience also plays a huge role. Okay? But for me, it's my knowledge. Whatever knowledge I have about the market is what gives me the confidence to wait, to sell, or to buy. So having knowledge on the market solves a lot of your problems in this market. For example, on US30, we can clearly see that our first OB is at that level, which I have marked. Okay? So if we are serious traders, we are going to wait to see whether price is going to close below that level. Below. But remember, we also have something called this is called a new week. Okay. So this is called a new week opening. gap. A new week opening gap. A new week opening gap. And one common thing about gaps is gaps will always be filled. Whether we like it or not, gaps will always be filled. Okay? So what we are doing right now on this USD market is identifying cues or getting what do we call them? Clues. We are looking for clues where the market might be headed. Okay? Now, this new week opening gap does not have to be filled today or tomorrow, but the gap will eventually be filled. Alright? The gap will eventually be filled. So that is the daily time frame. In the daily time frame also, we also have a fair value gap. There's a fair value gap here. So what I am seeing, remember, price goes where there is the nearest liquidity. And a fair value gap is an example of a liquidity zone. So price looks like it wants to get to this fair value gap, but for now we just draw and understand what is happening. Then we drop down to the 1 hour time frame. So in the 1 hour time frame, you can see that price is struggling very much to break this previous 8th January low. So once it can cross below this level and maybe come and retest a bit. Alright? So it closes below and then retests a bit. We can come to this order block now. We close the fair value gap and then we come to this other order block here. Okay? So my anticipation is that once it breaks this level, is that we are going to come and then create something called a what? A break of market structure. Then we come and fill this new week opening gap. Why do I say this? Because the market began by selling, and as we said, if you want to buy, you first sell. If you want to sell, you first buy. So the market is first accumulating orders by going in the wrong direction. Let us see where gold GBPUSD is headed. So 1 more minute. No one should lie to you that trading the markets is an easy job. It is not easy. If it was very easy, all of us would be having jets. But it's not that easy. I'm telling you, it is not that easy as it seems. So the market, we are in the kill zone hours now, and the market looks like it's trending down. Okay, we are in profits, not serious profits. We are in profits now. So hoping this trend will continue. The market has created a pullback. I'm not sure what it wants, but we shall be here. We shall be here. Whatever the markets want to do, the market should do what it wants to do. Our work will just be to react and to behave accordingly. So this is a good trade. Proper analysis, proper entries, proper stop loss. The only thing now we are left to do is proper waiting. So yesterday someone asked me, Lewis asked me a question. So Lewis is my good friend. So Lewis asked me a question. I would have to share my screen for this. Imagine that price hasn't printed beyond the red line. The daily chart was initially bearish and it formed an intermediate high from there. Alright, give me some time to understand your question, Lewis, then I will answer you. For now, my mind is fixated on GBPUSD. On a sell. I am on a sell, GBPUSD. It's a sell. It's a sell. It's a sell. Audio is not clear. I am on a sell, GBPUSD. It's a sell. 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 So I'll take my first profits if price gets to this level. How many pips are those? So the first run is 25 pips. Around a 1:1, which is okay. Which is very okay. We have to take partials because we don't know what price is going to do.
It's a sale. It's a sale.
I don't know why price is hovering is around my sale level. We are back at break even. But we shall wait for the trade to mature. Because we're in the London kill zone, and in the kill zone hours we have to be patient. Okay. Remember, I'm also taking these trades in my live account. The thing with these live sessions is that they help me also. They keep me on my toes. So I am more disciplined right now than I would be trading alone. Alright, so currently we're in profits on GBPUSD. We have taken this trade here with you. We have broken it live here with you. So you can see my mechanics of getting into the markets. You also saw that I did not hesitate taking this trade. Once it confirmed, I was in. I was in, seriously in. No waiting. Alright, so GBPUSD is in slight profits. So what we can do is go back to USD. Or the Dow Jones. So if I was trading the Dow Jones, I will do it for 4:30 or New York Stock Open or 10 a.m. 10:30 a.m. New York time to try to get a sell from this, because this pair has already broken this 1 hour OBs. It has cleared out that liquidity, cleared it totally. So that means probabilities of going down are very high. Also, we have a fair value gap here which has not yet been filled even a bit. So it is possible that price will come and fill this fair value gap before deciding to do what? To buy. But remember, if you are not engaging these markets during the live, during the kill zone hours, as explained when I was starting the live session, you are doing something wrong. Just go to GBPUSD. I would have waited for price to break this line, but since we already had a confirmed entry from a higher time frame, I saw no need. Still, there is a possibility that price is going to come to this level and fill this small fair value gap before going to sell. Okay, but what matters is that this level has been broken by price, so price can decide to come and fill this level. You just have to wait. Remember, we are not waiting for a win or a loss. We are not waiting for a win or a loss. We are waiting to see whether our edge is going to play out on this particular trade.
This level has been broken.
We are waiting to see our edge in action on this particular trade. So whether a win or a loss, those are negligible. They are negligible, they are useless, they are not very important. What matters is that we saw our edge, we executed, we got into the trade, and we waited. Simple things. Simple things. The simple things are your blessings. So the simple things are the things we are doing here. Identifying our edge, getting into the trade. And when we get into that trade, we get into the trade without expectations. We don't have so many expectations about the trade. We get in, we lock in on our risk, and we wait. Simple. But if there was another mechanism of knowing forehand that how this trade was going to go, we will not even be here. So waiting for a trade is not easy. Waiting for a good trade is not easy. Waiting for a good setup is not easy. Being patient on your winning trade is not easy. It's not easy. It's not easy. But that is what builds the discipline muscle. No, the patience muscle. The patience muscle. Yesterday, I told you after the live session that predictions lock you into one outcome. Scenarios keep you flexible. For example, if price decides to come and take me out and close above this level, my scenario change. Why? Because I already have new market information. Number 2, professionals prepare for multiple possibilities and they respond instead of react. That mindset removes the emotional attachment to being right. Trading improves when you stop forecasting and start planning responses. So predictions themselves is like saying today we must, if price does not do this, I'll force price to do this. So my prediction is a sell. So if price gives me indications of a buy, I will refuse those indications because I think I should be right. So price is at our break even. It has refused totally to move beyond that level. Even 1 hour 16 minutes later, it is still at that level. But what do? We just wait. We just wait. We just wait. Tell your neighbor, we just wait. We just wait. So price has gotten to our intended fair value gap. We would like to see the price level being filled before we see maybe a downward momentum. So what do you think about price? Are you in a buy or a sell? Are you on a buy or are you on a sell? Are you on a buy or are you on a sell? All right. Jackson says he's on a sell. All right, you can see price has filled this fair value gap the one we outlined. So we just wait to see what it wants to do next. Remember, when you're waiting for any trade to mature, the way we are doing right now, your spirit should be calm. Because remember, this is just one trade we are going to take. We have many more trades coming up, and we shall be in similar situations many times. So your risk all the times must be well taken care of. So our trade is approaching our stop loss. So we wait. I would also like to see GBPUSD. No, USD CHF create a potential low of the week from this level. If it breaks this level, we are definitely going down further. But our case study for today is GBP USD. So our trade is invalidated, it's almost being invalidated. So I know some of you are feeling the problem with having a floating loss or experiencing loss is that if you are not careful, you end up attaching the loss to your identity as an individual. So what do I mean by this? You end up thinking that you are a loser just because of one lost trade or one trade which is losing currently. Okay, so the major lesson for any experienced trader, the major lesson we all have to learn is we have to stop identifying with our losses at all. We have to stop identifying with our wins. So wins and losses will not accept us, will not affect us, not accept us. Wins or losses cannot affect us at any levels. Why? Because we have detached. So you have to detach from any trade you take. Because if I ask you about this particular trade 1 year from now, you will not be remembering this trade 1 year from now. But if you react on this trade, that is, you revenge trade on this trade right now. So what I am doing right now is I am shaping your psychology to handle these kinds of moments. Because this is a negative moment we are sharing together, all of us. This trade is in a floating loss. It's about to get stopped. And this is where many people lose their money. Because immediately your brain is telling you, I should not lose. I will go back. I'll have to go back. Okay? You might be experiencing what is called a flight or fight mode. And when we are confronted with this, and the time, and when we are having losses, is when we are confronted with this fight or flight mode. Fight or fight mode. So the response is usually fight, where you revenge trade on the market. Yet, even a win itself is not that important, because you can as well attach yourself to wins and think that you are a winner. You become overconfident. Losses, if you internalize the losses so much, you can lose your confidence as a person. So the idea is not to accept any of those emotions, whether wins or losses. Your work is just executing your system. So this trade might be taken out, but it was a good trade nevertheless, because first, it was from a higher time frame framing. So maybe our entries might not be that accurate, but I still think we are going for a sell this week. So if it gets taken out at this level we are right now, if price gets taken out at this level, my next course of action will be to wait. Because now I don't want to play these psychological games that price is going to get this level. I don't want to predict when price is going to I don't want to predict when price is going to sell. So once we are taken out of our trade, the next course of action will be to wait for this level to be, for price to break that level. Okay. So this is a lesson that we don't have to share the good times always. Sometimes many times we shall be sharing the bad times. And when sharing the bad times, you have to accept that these bad times will always be there every time. All the time. So you better take care of your risk. Your risk has to be your number one priority every day. So we are 4 pips away from stop loss, 1 pip. Alright, we have been taken out of this trade. So our next course of action will be to wait for price to break this level first, so that now we get a confirmed entry on the 1 hour time frame. So this marked level is where our higher time frame, is where our 1 hour order block is located. So once price breaks this level, we can be able to comfortably go in. So I'm not sure what price wants to do. So we shall just wait and see. My idea was that this sell level will give us a good entry. So I am out of that trade, and I hope you too are out of that trade. It is better to lose a good trade than to win a bad trade, because the latter reinforces bad behavior of gambling. A luta continua. Yes, that is true, Jackson. So it is better to wait to get more confirmation on this trade before we jump back in. So it wants to come and fill this fair value gap again. Alright, so The only way I will know now we have changed momentum from a sell to a buy is if we close above this level with a strong Marubozu candle. So you can see the importance of taking care of your risk always, because you will not be right all the time. Okay, so once price takes out this previous week's high, once price takes out this previous week's high and closes above it and then comes and retests, then we can know that we are going for a buy. But my idea was for price to come to this level, no, to come to this best sell level, then we start reacting off it. Probably it wants to come and retest this previous week's high. We never know. We will not know. So once I am taken out of my idea, I don't try to go in, because I don't have any new idea, and I cannot come up with a new idea immediately after a loss, because my judgment is not very clear. So if my judgment is not very clear, why would I want to get into that trade, to any other trade idea? Why? So this market teaches you one important thing, that no, you will not always be right. But when you are right, you have to ensure that you have taken advantage of that trade as much as you can. As much as you can. So now you have two levels to watch out for. So we have this level here and this level. So this is so this is today's market open. Today's market open. So we have our previous week's high here and today's market open. So we want to see and we want to wait for the market to give us more information, which will give us a weekly bias maybe. So this candle is very strong. It seems like it wants to go and break this our previous week's high. I also think my other mistake was thinking that this level had been broken. But my best of observation is that this level has been sufficiently broken. You don't have to have a very large candle to show that this level has been broken, but it was not the case. So things are a bit hot today, but you have to hang in there. This is not the first or the last live session we shall be having. We shall have a lot of live sessions. And no, we are not going to have a recovery. I see some mentors saying that because now they have lost during that session with their students, that their students should prepare for a recovery lesson. There is no recovery. We are not waiting to recover anything. We shall just take the next trade tomorrow. Could it be the news that has changed everything? Probably the news have changed the bias. But my bias in the morning, based on this price action, was that we are creating a high of the week. And remember, price down below here so price down below here, let me check the daily time frame. Let me put the daily time frame. So price below here had closed below these OBs. So with that, my bias was already set on a sell or a continuation to this now downward OBs. But it seems that price wants to give us it wants to dispute our today's analysis. So because you have been taken out does not mean now we are not going to observe the markets. No. So our next observation is either for the market to close above this level just a bit, and then we get in, or either or. So it's either or. Price to close below this level for us to do what? To continue with our sell. This will take about by the end of today we shall know, so that tomorrow we can come back again and get in. We shall also be watching this particular level itself because it's a previous week's high. So price must react off previous week's highs and previous week's lows. So for all those who are joining us right now, we have taken a hit today in the markets. So taking a hit in the markets does not mean we go and revenge, does not mean we get angry, does not mean anything, because this is just one trade out of the more than 300 trades we shall be taking this year. Okay, so not all the days are going to be good, and you have to prepare for that. You have to prepare for the sad days, for the losing days. This is one example of a sad day, but here we are, strong as oxes. You see, taking a loss is like taking a beating. But one important rule of war is that you have to know who you are trying to fight, because some battles and some wars are so unnecessary. So for example, if you are fighting with the markets, that is a lose-lose situation, lose-win situation. The market wins, I lose. I have tried to fight the market very many times, very many times, but eventually the market wins. So I'm thinking maybe the market is going to come and, create a second opportunity to get in, come and break this level, and probably continue upwards up to I don't know where. But for now, it has to retest this level, this previous week's high. And since I'm not going to get in again, we'll have to wait for the next session now to get in. But overall, this was a good session because it has showed you that yes, you can lose, but you don't have to lose our dignity just because of one loss. Okay? So immediately I get off this live, you also close your MT4 until you come until tomorrow. You don't look at your MT4, you don't think about that trade. We have discussed that trade in depth. So I don't know what will be tempting you to go back to that trade again. So Jackson says the technical analysis was spot on, but the huge move can be explained by the fundamentals. The employment change in UK moved from expected minus 17 to plus 82, a huge leap by any means. This effectively strengthened the sterling pound and consequently weakening the dollar, hence the huge move upwards. Employment figures changes always moves the market, especially if the forecasts differ hugely with the actual declared. So I don't like taking into account the numbers on fundamentals. What I like doing is now preparing what I will do for the next case scenario. Now I know in the next case scenario, when we have GBPUSD news, I would rather wait. But we can still check the CFTC before we log off. The CFTC. But I do agree, sometimes news changes everything. So we can check the CFTC and see where the hedge funds are placing their buys or sells. So for fundamentals, I like to use this CFTC report. It's called a CFTC report. A CFTC report. It is released by the Commodities and Futures Trading Commission. So if you want to use it, we have the Chicago Board of Trade and we have the Chicago Mercantile Exchange. So the Chicago Mercantile Exchange is number 2. And being number 2, there is long format, that is futures only. We have short format, and then we have futures and options combined, which are long format and short format. So you come to number 2, then you come to number 3, the long format. So the long format is going to bring you a page like that, and we go straight to GBP before we log off and see what is happening. So we have the British pound. So when reading this table, we have the non-commercial, we have the commercial, and we have the non-reportable. So the non-reportable, it is us, the small fish. We are the tilapias dealing with the sharks, and that is not very important. Now we also have the commercials. So the commercials, these are big banks trying to hedge their positions. Am I clear? So the commercials are just banks trying to hedge their positions, but the real market movers are the hedge funds. Now the hedge funds are short GBPUSD. They have over 105,000 contracts of shorts on GBPUSD. But you can see they have removed some of their short positions. But overall, these traders are short GBPUSD. And that is why one of my buyers has been a short. And remember this data. Can you read here? Can you read this print? This data is from January 13th. So this data is only a week old. So it's viable data. It's data we can use to predict for swing trades. Okay? So for GBPUSD, along the way, somewhere along the week, we might get a re-entry to the sell side. It might be at this particular level. Okay? So we just have to be patient and get that level. Remember, even US30. So for US30, I'm anticipating for price to come and create something like this. But if it does not do that, because I've seen Chris in the live session. So if it does not do that, we shall wait for US30 to close above, then we can continue buying. But my bias for US30 is a buy. For gold, I would rather wait for price to get to this level. Okay, this level, it's called where we mitigate these blocks. We mitigate these other blocks. We just revisit them. Mitigating is just revisiting them, and then get an entry. So with that, thank you for being in the live session. Let us meet tomorrow, same place, same time, and continue doing what? Continue doing this gold. Okay?